All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. This morning we saw the S&P open up and S&P futures dip below this kind of little trough that we talked about this morning, which basically said, hey, you know what, this isn't a place to be an aggressive buyer, at least for the day. We're probably not going to see the market, surge off any. We also saw Facebook, Bank of America, weekend go negative. And so basically said, hey, you know what, put the brakes on any kind of massive buying, massive market buying here. And, we start seeing the market kind of bleed and drop. And, there's nothing really in it that makes you look and go, wow, this market's in trouble. This market's about to break down, or this market's about to, fold. It was much, or it is and has much more been one of those that's just, okay. Not a whole lot going on, in terms of the index. So I haven't pulled the trigger here on anything. I have a few things that are very, very tempting, but I'm just waiting for confirmation here on them. And you'll probably be able to gather from, my comments here this morning what types of stocks I'm looking at. But, one of the areas that really kind of comes to mind this morning are the consumer discretionary stocks. Now, consumer discretionary is a sector that is consumer driven, right? But discretionary meaning it's a little more volatile in terms of consumer spending. Right, consumers they've got to spend money on Johnson & Johnson products whether there's a recession or not. They're going to spend money at Walmart whether there's a recession or not. Are they going to spend money for more stuff on Amazon? Are they going to spend money for stuff at Bed Bath & Beyond, at Best Buy, at Kohl's, at some of the other retailers? No, not really. Are they going to spend as much money at Disney if there's a recession? No. And so those stocks that, kind of have that flux in revenue based on the economy are classified as consumer discretionary names. Now, there are several consumer discretionary ETFs out there in the market. Let's go take a look at one of them here, and this is the XLY. Okay, and this is an ETF that you can kind of see what it's done here over time. In many ways, it looks like Amazon. Amazon looks a little bit different. Amazon, in fact, is lagging here of late. But in general, as goes Amazon, so goes the XLY. Now, anytime we want to see the components of an ETF, all you have to do is go into a Google search and type in the ETF and go components. XLF components, right? And it'll bring you up something. And I like to look for, they all will show it to me here, but something with the link usspiders.com tends to have, the best information for me. And then you just find wherever it says holdings, right? And it'll show you the stocks that, that it is holding. And I just noticed here I'm on the XLF. Let's go to the XLY components. It's like, man, Berkshire Hathaway. That's a different one to have in the XLY. But either way, we'll go and we'll do this here. And we have Amazon, Home Depot, McDonald's, Nike, Booking, formerly known as Priceline, Starbucks, Lowe's, TJX companies, General Motors, and Target. Look at the weights here. When we go for the top four, right? The top four make up just under 50% of this ETF. So the XLY is Amazon, Home Depot, McDonald's, Nike, and Booking, right? An interesting mix in these stocks here today, right? They're very, very interesting mix because you have Amazon, which looks like this and has quite a bearish tilt to the stock, especially after earnings last week, and has a lower high here. Definitely a bearish tilt to Amazon. You look at Nike, and definitely not a bearish tilt, right? Definitely a very bullish dynamic here with Nike. Now, Under Armour reports earnings after the bell, so that'll obviously move things a little bit. But you come into some of the other names here. In the discretionary, we have McDonald's, Nike, Starbucks, right? Let's take a look at those. Here's McDonald's. Definitely a bearish tone to this one. In fact, first time in a long, long time that we have a bearish volume pattern here with McDonald's. And you know how I feel about McDonald's. I'm very bearish McDonald's. I think this is one of the more bearish stories out there in the market. It's one that they continue to take out more debt in order to fund share buybacks. They're not buying back shares like other companies, using free cash flow. They are going into debt to buy back shares, and to me that is about as when you look at the numbers, you look at what's going on, that's about as artificial as it comes. And big concerns here, when it comes to McDonald's. But definitely in the bearish camp for me. Starbucks, well, definitely not bearish, right? So you can see the mix here in the XLY components. You have this Amazon chart, which is generally bearish. You have a McDonald's, which is generally bearish. A Nike and a Starbucks, which are two of the most bullish stocks charts out there in the market. And then you have Home Depot, who reports earnings, in 2 weeks. But has had a nice little push on up. It potentially has a little secondary downward wave, up and coming here for Home Depot. So it's a very mixed group. It's a very mixed sector from stock to stock. This is not a group that everything is moving together, right? We saw booking earnings, BKNG. They're always, going to be volatile, but, you can see it's had a nice little move here of late and consolidating here just a little bit, but very, very mixed. When you come in and just take a look at the XLY itself, it's up about 40 cents here, this morning, which is pretty good considering what Amazon is and what's going on with some of the top stocks. It tells you how much Nike and Starbucks are really pulling this. But we have an ETF that has come up here to its 200-day moving average, continues to have lower highs, has had a massive upward move. To see some sort of pullback come into play would only be natural. We have a MACD that has started its downward turn, which doesn't necessarily mean bearish, right? Generally, bearish is a secondary, downward turn, but the first downward turn tends to mean top is in, or at least short-term top is in, and, consolidation is, likely. Consolidation or pullback is, the more probable type of scenario here. So we have this kind of here with the XLY, and I asked myself, I say, hey, Jeff, hey, is this a way to get some exposure to the downside of the market without taking a huge amount of risk? Right? I can't really go in for the challenge yet and go buy some Amazon puts. Right? I could go buy McDonald's. But is this a way to get some downside exposure without a huge amount of risk? The answer is yes. I can get it a little bit better. But, you start to look at the options, the 107s for next month. They're probably worth about $1.90 right now. Okay, so, you essentially need a move down to about $1.05 to break even. If you hold it throughout that entire time. So definitely need a little bit of movement, but it's not, so egregiously overpriced that, you can't get that movement come into play here for it. But the XLY is doing something that we are seeing a lot of other stocks in the market do today, and something that I think is very important if you're looking on the bear side. And that is to look at this morning's lows. This morning's lows, and here for the XLF, you can see this morning's lows. If they get broken here tomorrow on a gap down, it's going to auto-trigger a lot of selling to come into the market. it's a really nice risk-reward spot because you can enter and use today's kind of closing price as a stopping point, so you get a decent risk-reward, and you get a high probability of the trajectory going your way. That is if today's lows are broken. But the reality is, so far, today's lows are not broken. And if we come into something like the XLY and we pull up an hourly chart, we're trading above the 7-hour moving average. If we were to break today's lows sometime tomorrow, we'd be breaking below the 7-hour moving average, right? We'd be breaking below the lows. We would have, the hourly, the daily kind of chart coming together in a singular direction. But for now, it's not there. And from a bearish standpoint, and looking at a lot of stocks in the market, a lot of stocks on my watch list, this is a very common theme. Where, yes, it could turn bearish, and it could turn bearish fairly quickly. But it's not there yet. And the reality is the bulls still have control. The bulls still have, the majority of the elements here, both short-term and mid-term. Now, I think for the bulls, consolidation risk is a huge factor. There's a lot of consolidation risk out there. I think for a lot of things, it's tough to make a good argument that there's huge upside in the short run, but it's very easy to make a technical argument for consolidation. But that's what I'm looking at when it comes to the XLY. And it's not the only one. You go take a look at something like a FedEx. Right here it is above the 7-hour moving average. Okay, great. You know what? It's not something we want to short it right there. But if it were to break down below the 7-day or 7-hour moving average, it would be breaking this morning's lows, and it would be continuing some of the sell-off that we saw on Thursday and Friday morning here with FedEx. And so, when I look at the stocks I'm bearish on, the FedExes of the world, the AMDs of the world, some of the consumer discretionary names, they all kind of have this same element, right? I looked at AMD this morning. I'm watching it. I look and I go, okay, I price out the options. Like, all right, you know what? Do I go and short this here? It was down about 30 cents. But the reality is it's not triggered yet. It's not triggered yet. But if it were to close here, break below the lows from today, sometime tomorrow, boom, there's the trigger. And whether it be AMD, Home Depot, XLY, FedEx, you name it, from a short side, a lot of these look very similar. Now you say, well, Jeff, can they be played to the long side? Well, yeah, absolutely. You want to go buy AMD? You want to play it higher? Yeah, today's low, right? You want to go buy FedEx, play FedEx higher? Yeah, base it off today's low. Right? There's a lot of things that, you could take and go, well, you know what, I'm not really bearish. Well, okay, then take them off today's low. There's a decent risk-reward factor with that. But bottom line is when we look at a lot of stocks out there, there's a big consolidation risk. But when we look at some of these like an AMD and a FedEx, there's not a lot of consolidation risk. They're going to move. They are going to have a move in them. And, that next move is going to be down if today's lows get broken. And if it's not, that next move is path of least resistance will be higher, for these individual names. Now, I talked about Walmart this morning. Walmart opened up, and by the time the options opened, it was up 50 cents. So it's kind of just hung out and sat here all day, pretty much since the options have been open. There hasn't really been a lot to do about this one here. I'm looking at it. I may enter by the close here today, but you look at how different it is from Target today. Target definitely downside action here, and I've priced out Home Depot, but with earnings upcoming, I can only get about a week and a half on the option, without bumping it into earnings here. Now Disney, Big bad bearish engulfing here on Disney this morning. In fact, let me pull up the chart. You can see the open, little open higher, and then just immediate sell and immediate sell on volume. We've had a little bit of snapback here that's now getting sold into. This you'll notice was not in the top 10 here of the consumer discretionary ETF. In fact, let me pull up, let's see about more. All right, it's not going to let me pull up more. Oh, here it is. Yeah, that'll take a while. But overall, Disney is one of those that, doesn't have a major weight here in the XLY, but is that same type of concept. Doesn't have the same charting concept, but does have some pretty bearish directional action associated to it here today, and something that, look, if you've ever traded Disney before, you know not to chase it on its lows, meaning you don't buy puts when it's at its lows, when it's hitting its lows for the day. You buy puts on Disney, or you get bearish on Disney when it's up near highs. Right? This is something that, yes, occasionally we'll see it end on its lows on a day and then go down the next day, but more often than not, this stock ends on its lows for a day, it goes up the next day. So, not one I want to short into this action, but having some of this type of bearish action here, after what we saw last week, and we saw the earnings, and we saw this kind of hefty reversal on it, and very, very, very kind of, that the sell action is still there from earnings and still coming in here from earnings. So anyway, those are some of the things that that I'm eyeing here. You take a look at some of the emerging market ETFs here today. The EEM and the FXI, they have weakened, a little bit here since the open. The EWZ, the Brazilian ETF, has weakened here since the open. We have seen all of these kind of just weaken along with the U.S. dollar, strengthening. And we're seeing that dollar element, and we see the IWM. We see small caps outperforming here today with that, and it is a dollar element. I don't know that I can look at the IWM and say, well, the IWM is up, so market's uber bullish. The IWM, EEM, really kind of looks like a dollar component really coming into play here in a big way. With that, we talked about this morning how gold was going to open up lower. What's happened, though, is gold has stabilized here today and actually found some support. It has not continued to sell off with the U.S. dollar rallying. In fact, gold here, since just before the market open, has caught a little bit of a bid in a very bullish fashion. So gold is definitely one that holds up here by the close, offers a really nice risk reward off of today's low, and I know that's only 5 or 6 points, so it's not a huge cushion, a huge buffer there, but definitely an interesting level there for it. Okay. So anyway, those are some of the things that that I'm looking at here. But overall, I've not pulled the trigger on anything. I'll give it a little bit more. I'm not expecting a huge, massive move in the market, here in the next little bit. But I do think that this morning's action, does have elements that are telling. Does have elements that have some implication going towards the future, especially if the lows from this morning on a Micron, on an AMD, on a even some of the energy names, if they get broken, they're in trouble. They're in trouble, but they're not broken, and at the moment they're not in trouble. And so it's still, for me personally, a little bit of a holding pattern, for a lot of those bearish style types of plays. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.